This is Michael Regan with the Regan Team Home Loan Group, and here's your weekly update for Tuesday, September 3rd, 2013. So a lot of news to get to. So first wanted to remind you, this came out about a year ago on USDA loans. A lot of areas, say in Sonoma County like Sebastopol, Windsor, even the city of Sonoma, were eligible for the 100% USDA home loans. Well, that's changing with the new census that came out in 2010. A lot of areas, again, that used to be eligible for USD 100% financing are going away. This was supposed to happen actually last October. Congress extended it for another year, so unless something changes as of October 1st, you're going to see some of the cities in Sonoma County that are not going to be eligible anymore. So that's Agua Caliente, Boys Hot Springs, Healdsburg, Windsor, City of Sonoma. So you can always just search our site, go to category USDA, and find this blog about it. And you can also read more information about the USDA program here. But just want to give you that heads up for those of you who have done or have clients in these areas. That's going to be one less financing option that's going to be available for you. So now on to last week. First, initial claims were better than expected at 331,000. So we'll show you how that affected the rates in the market last week. But again, good news for the economy, bad news for mortgage rates and for mortgage bond-backed securities. I also want to give some good news, though. So a lot of people were worried that housing prices may not continue to appreciate with the interest rates going up. Well, the good news, CoreLogic came out with their July home appreciation, and it was up 1.8% in July. So again, even with interest rates up considerably, you're still seeing home appreciation, and we're up 12.4% year over year. So, this is great news for your clients, again, that may be on the fence again, seeing what happens with home prices and everything, that they can see that, look, even with interest rates up, homes are still appreciating nationwide. So now we're going to get into what the market's doing today. So right now we're down 48 basis points on the Fannie Mae 30-year fixed and down 52 on the FHA 30-year fixed. So you see this. Basically last week we had a nice bump up. We hit the 25-day moving average, and there wasn't enough momentum to propel it past that. And so now we're dropping back down. Right now we're in a locking stance. Whenever any of your clients or you get into contract or looking to refinance, I would lock in right away. We're not in a floating stance right now because there's much more room to the downside than there is to the upside right now. So that's kind of what we're looking at. Now, there's one huge wild card that can play into this, and that's Syria. So right now, President Obama has elected to ask Congress for permission, essentially, to do any kind of military action, and Congress is off until next week. Now, if Congress comes out and they authorize some kind of military action, again, a lot of the money that's right now in the stock market could come to bonds, because again, when there's any uncertainty, things like that, any bad news, wars, you're going to see money pile into bonds. So right now, again, there's a locking stance just because there's not a lot of momentum to the upside. But if something happens with Syria, especially something major, you could see a lot of money rush into bonds. You could see interest rates get better, at least for a short time, if that happens. Now, again, if nothing happens or it's very minimal, then again, we're in a locking stance because there's a lot more pressure to the downside and there's upside as we get more economic news that is good for the economy in general. Now, there's a couple things. So another thing they'll play into this other than Syria is on Friday, the jobs report will be released for August, and they're expecting 175,000 new jobs created. So again, the number's worse than expected, mortgage rates could get better. If it's better than expected, you could see a continuing decline the mortgage rates. Now, a lot of people ask, what are the rates roughly? So roughly on a conventional 30-year fix, you're looking at around 4 3/4, and on FHA, you're around 4 1/4, give or take. So that's what we're looking at on that. Then also, one other thing, just want to remind you that on Friday, September 20th, from noon to 2 at the Lucchese Center in Petaluma, I'm going to be teaching a Norbar class called Building and Branding Your Real Estate Business in the Digital Age, and Debbie Hordham from Fidelity National Home Warranty will be providing lunch. It'll be a great class to kind of get all the A to Z of the digital part of the business, from your database management to Twitter, Facebook, YouTube, blogs. Also, we're going to cover video and becoming mobile friendly and reputation management. So this will be a great class to to add to your phone calls. You're meeting people face to face. This will give you the part of your business digitally from A to Z. So this would be a great presentation and great class for you to come and learn about those different types of things, and of course get a nice lunch. So anyway, hopefully that helps. And again, if you have any clients that need to get pre-approved, or you yourself are looking to get pre-approved or refinance, please do give us a call at 415-672-2499 or 707-508-8473. Have a great week.